Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today I want to address debt relief. I was introduced to a new prospect and we had a great conversation. Hi, Lauren. And in our conversation, she had shared with me that she's received letter after letter after letter from this company called Credit Associates. And so in her case, she has 4 credit cards listed on this letter by the name of the creditor. So I'm just going to make them up so I can protect her privacy, but it might say Discover Card, Capital One, Citibank, and Synchrony. So allow me to read this letter to you. On the very top, it says Notice of Credit Card Debt Forgiveness. Well, that sounds charming, doesn't it? So of course you're now intrigued and pulled in and excited to read this letter. Oh my goodness, there's a credit card debt forgiveness program? Tell me more. So again, it lists her credit cards and then it says, Dear Lauren, we are contacting you regarding your eligibility for credit card debt forgiveness through our federally regulated debt relief program. What? Doesn't that sound safe? Next, it says, please contact our offices and lists an 800 number to determine if you qualify for up to, and this next part of the sentence is in bold font, up to half of your credit card balance to be forgiven. Isn't that such a wonderful word, forgiven? Our company has recently settled accounts with, and it lists out her 4 credit card companies. If you have accounts with these or other lenders, you may be entitled to. Their words just does something to me. Entitled to a reduced settlement of your outstanding credit balance. Please call us at, it leaves the 800 number to receive specific details regarding lowering your outstanding balances. And then you may also inquire through a personalized website. So they know when you log in responding to this letter. And there's also a QR code for direct access to a portal. Again, now they know that they've got you with this letter. So over in the bottom right-hand corner, they have this little box and it has program example, credit card debt, $15,000. Guess how much credit card debt she has outstanding? And then it says estimated settlement amount, $6,750. Estimated program payment, $188. So it says based on, for this program, based on historical negotiated settlements. Program fees not included. This is an important statement, and we're going to talk about that in just a moment. Program payments based on 36-month program. So now I want to calculate $188 a month times 36 months. So that is a total amount of $6,768. Now remember, it said program fees are not included. So let's go to the small print at the bottom. We always need to go to the small print at the bottom. It tells you if you do not want to receive these offers, how to opt out by calling or going to a specific website. And it also has a mailing address. Then it states, this offer is not guaranteed if you do not meet our criteria. Okay, well, let's dig deeper because there's even smaller print under the small print. This is a communication from Credit Associates LLC. This is an attempt to facilitate a renegotiation of debts directly with creditors, including credit cards and other unsecured loans. Why unsecured? Because if there's something that's collateralized, like a mortgage loan is collateralized or secured by a home, an auto loan is collateralized by the car, so it's for other unsecured loans. Numbers being used above are only examples and do not include any applicable fees to us. Credit Associates LLC is a private debt relief company and not a lender, a creditor, or a debt collector. This is not a pre-screened credit offer, and your credit report was not accessed in relation to this offer. Let's pause right here before I give this last sentence. Your credit report was not accessed in relation to this offer. So here's my question. How did they know how much debt she has outstanding and the 4 credit cards that carry that debt? So this last statement says your approval for our debt relief program is contingent on having $10,000 or more in debt and a quantifiable hardship. So what might be a quantifiable hardship? An illness, a diagnosis, a job loss, divorce, something along those lines. And then it says not available in all states. So then, of course, I head over to creditassociates.com and check out their website. So they have a ton of really positive reviews, which is actually quite shocking to me, but it's still a debt relief company. So what does that mean, debt relief? You may have listened to an episode that I did a while back regarding National Debt Relief, which is a very similar company. And if you listen to it, you may recall that I tell you that they slaughter your credit. There are really 4 categories of managing debt outside of repaying it as agreed. There is debt counseling, debt management, debt consolidation, and debt settlement. So debt counseling is the way I want you to go. This is where you work with a nonprofit, a credit counseling agency, and the person you're working with is a certified credit counselor. I have that designation. I don't act as one. I just wanted it for the education component. And debt counselors will go and negotiate on your behalf with your creditors, and they'll request a lower interest rate, lower payments, maybe some different terms to help you get out from underneath your debt. What I love about debt counseling and working with debt counselors is that for the most part, the creditors get paid back in full. Why is this important, or why would we even care? Well, for one thing, if a credit card company extended you a line of credit, this credit card, they basically fronted you, loaned you this money with the agreement from you that you were going to pay it back and pay it back on time. So if we are people of our word, people of integrity, we want to follow through with our commitments. And of course, things happen, right? Life happens. I know costs have gone up across the board, from housing payments to insurance to food to APRs on the things that we are borrowing on. And now student loans have come back into repayment status. And for some, that's hundreds and hundreds and hundreds of dollars a month. So I get it. I understand the squeeze. So please don't hear me that I'm oblivious to any of this. I'm not. But when you accepted that credit card, you said, I will pay this back, right? And that's why they gave you or extended to you this line of credit. So I feel like even though sometimes things get tough or we hit different parts and places and events in our life, yeah, we need a little help every once in a while, but we also need to follow through on our commitments. So what I love most about debt counseling is they'll help you to repay it, usually in full and just with reduced terms, such as a lower interest rate and lower payments. And it just feels like a kinder way of attacking this debt versus the other options. So the next one is debt management, and that's where you follow a pre-agreed payment plan and timeline to pay off creditors. So it can be through a debt management company, through the debt counselors, those kinds of things. So it might be an extension on the amount of time to pay it, or again, a renegotiated interest rate, or those kinds of things. But a debt management plan can take a much longer time to pay off your debt. It's because a lot of times they're extending or granting you a longer repayment plan. So it's pre-negotiated terms that everybody agrees to and usually doesn't reduce the total amount of debt owed. So those top 2 would be my preferred. Debt consolidation is basically taking out a loan to pay off multiple places, such as several credit cards or a couple of credit cards and some personal loans, those kinds of things. And now this consolidation loan often comes with a lower payment, hopefully lower interest rate than what you're paying on credit cards. The problem I have seen though is a lot of times people will get a debt consolidation loan and then just go and continue using the credit cards like they had been, even though now they've been paid off, you're going back into debt and now further into debt because now you've got this debt consolidation loan and a new balance getting created on your existing credit cards. So don't get caught in that trap. And then the last one is debt settlement. And that is what Credit Associates is. That is what National Debt Relief is. And this is where they start playing their game. So here's what happens. If you agree to work with them, they will send a letter to your creditors, essentially the same smell as a cease and desist. Hey, you're not going to communicate with our client. We're going to go through a debt settlement program and you are not to contact them. So they don't. They can't call you and say, hey, Christy, your payment is late. And they won't send you letters because they've received this letter from the debt settlement company. And so you now have a much lower payment. In this example of $15,000, it's $188. And that probably feels like a far cry and a lot of relief from, maybe the $500 minimum payment that those credit cards are requiring. And you do the minimum payment, you really don't touch those balances, right? So you're like, well, gosh, this feels good. In the meantime, you have a 30-day late payment, a 60-day late payment, a 90-day late payment, now 120 days late. And once it's 4 months late, friends, that creditor can now send it to a collection agency. So now you have all these late payments. And if you have leaned in and listened to my past episodes, you know that payment history makes up 35% of your overall credit score. So now you've got all these late payments. The creditor may close out your account and now you have this outstanding balance and a zero limit. Oh my gosh, talk about really messing up your debt utilization, which is another huge chunk, about 30% of what makes up your overall credit score. And now, to add fuel to this fire, you are getting new collections. So those credit cards and unsecured loans that you have in this debt settlement program, they're now all in terrible standing. They might now have new collections getting started for each one of them, and your credit is slaughtered. So what this company will do is they will make your creditors wait. They will make them bleed out, and they'll contact them and they'll say, hey, we know that Christy owes you $5,000 on this credit card. Well, we have $900. And the credit card company says, can't do that. Okay, fine. So they wait a few months and they come back and they say, hey, so I know you couldn't take $900, but now Christy has $1,400. And they say, no. They wait a few more months and now they'll come back and they'll say, hey, Christy has $1,658. And they might say, well, okay. And so now what happens is they settle for less than owed. It will be reported on your credit report, settled for less than owed. It will now close up that collection, but it doesn't remove that collection. And it won't change that payment history that you had with that creditor. Keep in mind, it's going to report for the next 7 years. And here's the crazy part of this. For the amount that is settled, some creditors will mail you a 1099. So let's say that this creditor accepted $3,000 less than what was owed to them. They may send a 1099-C. So what is this? The C stands for cancellation of debt. And when they file that to the IRS and send that to you, you are now on the hook for paying taxes on that amount that's listed on that 1099-C. So this one can hurt because you might owe taxes on it as if it was some form of income for you, although it wasn't. But that forgiveness, that cancellation of debt can be treated that way when it comes to working with the IRS for your federal income taxes. Okay, so now let's get to what I really want to talk to you about. This company will charge you 25% in fees of what they're working with your credit card balances. So here's what it says in the small print on the bottom of the page at creditassociates.com/debt-relief. Clients who are able to remain with the program and resolve all their debt realize approximate savings of 55% before fees or 30% including our fees in 24 to 48 months. We do not guarantee that your debts will be lowered by a specific amount or percentage, or that you will be debt-free within a specific period of time. We do not assume consumer debt, make monthly payments to creditors, or provide tax, bankruptcy, accounting, or legal advice or credit repair services. Please contact a tax professional to discuss tax consequences of debt forgiveness, which is what I just talked to you about regarding the 1099-C. To round things out, it says not all creditors will negotiate debt resolution with third parties, which they would be a third party, and some creditors will only negotiate under certain circumstances, such as a charge-off. Now, if you have a charge-off, that could actually hurt your credit more than just a standard collection. And please listen into this. You may be subject to collection activity or lawsuits by creditors or collectors if you are not making regular monthly payments. So what does that mean? This means they've had you stop making your payments to those creditors and you're making a payment to Credit Associates. So let's say they have thousands of people that are doing this program through them at the same time. Those thousands of people are sending them a couple $100s a month, and that sits in their account and accrues interest in addition to the 25% of the amount of your debt that they're going to charge to you in fees. So as much as this language, notice of credit card debt forgiveness, and a federally regulated debt relief program, and half of your credit card balance to be forgiven, please don't get caught up in the words, because what they're going to do is slaughter your credit, ruin your relationships with those creditors, which makes it more difficult to establish credit in the future. They may demolish your credit in such a way that your scores will take years to rebound, which will then cost you more in interest if you go and finance something large like a house or a car, because now you're paying higher in interest because of a lower credit score, if you even qualify with your credit score at all. So if you're in that place that you really need some help and they keep sending you this letter, my suggestion is to consider debt counseling. Not National Debt Relief, and not Credit Associates. So check out nfcc.org. That is the National Foundation for Credit Counseling. They will help connect you with a counselor. You can also check out incharge.org. That's spelled INCHARGE.org. They are a leading nonprofit organization. They have certified credit counselors, and they can help with lowering interest rates, waiving credit card fees, obtaining lower credit card monthly payments. I just really want you to go the counseling and nonprofit way versus these companies that make 25% off of you and create a lot of havoc on your credit report that's going to be there for many, many years. If you have any questions, reach out to me at questions@creditchristie.com. And if you want to finish financially free, check out my book on Amazon. I share all my secrets there. Again, the book is called Finish Financially Free. And thank you so much for listening. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.